morning, traders. Welcome to the weekly Elliott Wave Street Update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts and analysis. Before we start with the live market analysis, you can find on ElliottWaveStreet.com our fantastic membership that includes analysis on the Forex market and futures or stocks and futures or the full access, plus the new members academy, where I just add this week the candlestick price action course, which is fantastic to read the markets by bar. And also, if you are new to Elliott Wave, the Elliott Wave crash course is going to quickly get you into the Elliott Wave road to understand the market cycles. All right, traders. So what if we start the analysis on the monthly chart, the big picture? This is the euro. So to keep it simple, the plan on the euro is to have this three-wave sequence. That's what we have been working with over the last years. So it seems that the market, if we connect this low with this low, we are going to get a trend line that the market is testing today. And that's really important, because if it successfully bounces from there, we are going up, and there is something new. And is, what if we add another line here? Then we can end with a Elliott Wave triangle, A, B, C, D, and E. An Elliott Wave triangle always is gonna have 5 hits inside. And if we have the price testing from there, if we have the price bouncing from there, there is where the wave C red that I'm looking for could be starting, and it could bring the price lower, right? So that's going to be a line that we are going to check if the price gets to that area. Now we're going to focus on this area, because it's going to be key. If we have a bear breakout, a strong bear breakout, then the euro is going to move below the one area, and in that case this leg is already active. So we are going to find on lower time frames the scenarios that we need to find in order to have a high probability trade, in order to validate this bounce. This bounce is similar to this one here. I remember I was trading that one as well with Elliott Wave. So we have a red candle, and that red candle was huge. You know, this one that we are seeing at the beginning of this week is pretty big, of course, but this one was huge. And look, the price hits the lower triangle area and shows some noise, some rejection, and from there it bounces. So something similar could be happening here. But of course, if we have a follow through, let's say that this week a candle closes near the lows and maybe breakouts this area, then the follow through is likely to the downside, and we can have a huge move down on the euro. I don't think that is going to happen. Of course, it's possible, but as technicians, we need to go to lower time frames, and we need to start reading the price action inside, and that's what we are going to do now on the hourly chart. On the hourly chart today, we're seeing a bounce, but first of all, let's have a look at the trend before. Look, we have a price moving down, and then we have a little retrace. That's not enough to stop the move down, and the price moves down. We have a little retrace, and the price moves down, and here is where it starts getting interesting, because look, all the buyers that they start showing up, of course, is a trap, and the price moves down, and we have more buyers. So we are starting to see a change of behavior. And the price moves down again, reaching a lower low, and we have buyers, and these buyers are different. Can you see the difference between these buyers that are right now in the live market and previous buyers? Which difference? Well, first of all, the slope of the move. the strength of the move, the size of the candles, right? So these are buyers that are going more aggressively into the price, and this is what is called accumulation, right? So let's suppose that we are in a bear trend like the one that we have on the euro, and we start seeing the price eventually moving a little bit higher and then moving lower, moving higher and lower, right? So if we try to catch the end of the trend, especially during these complex times, we're going to lose several times until we finally get into the bounce or the return to the mean, right? That's the life of a counter trend trader that is going to lose most of its trades, but the ones that he's successful, he's going to make good money. But more than that, we need to think, well, when is going to be the good one? You know, when is going to be the real one? So that's where Elliott wave theory kicks in to help us. Because when we have the price going down and eventually we start seeing a 5-wave sequence, and the slope of that 5-wave sequence is stronger than the previous attempts that usually are 3-wave sequence, and for the first time we start seeing something different. That's the first hint. Then we still have the risk, of course, of price moving down. Always is the risk, because it's a bear trend. And then if we wait for a 3-wave sequence down and we validate that 3-wave sequence down, the probability that the market is going to start pushing higher after that, and that this is the first retrace, is huge, because now we have a story. Now we're having a context of the market. So if we move this theory here into the live market, what we are going to get is that we need to have a 5-wave sequence. So far we have 1, 2, 3, waiting for 4 and 5. If it's bigger, better, right? This is not matter of, oh, I'm losing my trade, I'm losing my entry, I didn't trigger my entry here at the bottom of the market. All those feelings, don't worry about that, because the good news, if we have a clear impulse that we don't have yet, is the fact that then we can work with the corrective to find the end of the corrective and trigger the trade and start following the move up for a strong move, a wave 3. But only if you have the whole setup. What if right now in this moment we have a breaking news, the news X is telling X thing, and the market feels more fear of the situation, of the terrible situation that is happening, and the euro makes a candle like this one here. You start seeing the difference of waiting for a good setup than trying to enter the market because you are seeing a couple of green candles. Is not enough. Right now the market can move down, and it's actually not a good level to sell, because the trend has been moving down for a while, and we know that the trends are not going to be there forever. We need to have at least a retrace, right? Because eventually we're not going to have more liquidity. But in case that we have a candle like that one, of course, is not going to look like our setup, right? It's going to be something completely different. So we are not going to try to catch the falling knife, only if we have here the setup. That's it. So look how we can build a strong trading plan from candles before, and we are going to be ready to act, of course, knowing that there is a risk. There is no 100% probability in any trade setup, but it's higher probability when we have a good setup. And of course, this is going to work on any market. This is the kind of analysis that we do every day in the membership. Now let's have a look at the S&P. On the S&P, we're seeing something fantastic, because the S&P, after reaching these lows, it started to show an impulse, right? So it's the same story as the euro, but the S&P is ready because we have the impulse, and after that we have this irregular flat formation because the connector moves clearly above the highs, completely valid, is called an irregular flat in the Elliott wave theory. And the price was testing this area today. And what happened? Are you seeing a successful breakout? Are you seeing sellers at this area? Of course not. Clearly we have a rejection. So from there was enough, especially after that green candle, to start buying, to start following the trend, because here the trend is to the upside. Here the market changed its behavior with this strong move up. Before the trend was going down, but not anymore. It seems that this is the bottom of the market, and it seems that this is the bottom of the corrective wave, because we're seeing the impulse. So here is an impulse, and here the market is gonna test this area. Is the corrective? Is the throwback? Is the Elliott wave corrective or the test? Has different names, right? But it's the same at the end. So the plan with the test is to check if there are aggressive sellers, because if they are aggressive sellers, the institutions will be extremely happy to buy and continue buying at lower prices. But if there are no more sellers and we start seeing the volume decreasing and we start seeing the interest in terms of momentum decreasing, and the price bounces from there, is going to be a fantastic entry to follow the price higher. So the problem of waiting for those corrective waves is not all the times we're going to have them. For example, here we have it on the S&P at the bottom of the market. This is something to be used after the fact, because buying after this strong sell-off is crazy. You know, here is different because we have all this story on the left, but here was crazy. But there we have a test. So this one is educational, not real life trading. This one is real life trading. But here we have the price moving up, and look, the price tries to continue lower and is not finding more sellers, and that's a wave 2. That is extremely easy to spot after the fact, but this case was not good to trigger when the market was live. All right, so it's a good example to see how a test looks. That if we have that same pattern here, will be fantastic, but not because we have a test we should trigger a trade, because in this case the chances of lower lows were higher when the market was live right there, because we have a strong trend. So context is extremely important when we are navigating these markets. So this is the work we do every day in the membership, explaining candle by candle all these situations based, of course, or under the frame or of the Elliott wave theory. So every day you're going to get a video covering all the instruments that we talk about in the membership, the Bitcoin, the Euro, the Pound, the S&P, and all the instruments that you can have. You can get the list in the website, and we cover what is expected to happen after that, how we can validate that, and what are the best places to place the entries and to follow the market. So if you want to get this fantastic analysis, you can visit us on ElliotWaveStreet.com to have immediate access to the membership. You can get the first month trial for just $19. Get the Forex, the stocks, or the full access subscription. Please have a fantastic start of your week. I'll see you inside the membership. Take care. Bye-bye.